Hello guys, and welcome to my YouTube channel once again. In this video I want to show you how you can use key levels as another price action strategy to find high probability setups and then take trades. All right, so you need to understand how to mark out key levels. That's the first thing to do. Then you need to learn how to identify chart patterns, candlestick patterns, and maybe some good breakouts. All right, so the first thing you will need to do once you open the chart, mind you, if you find these key levels on a higher time frame, it's better. Like the daily time frame, the hourly time frame, it's good to find high key levels on those time frames. Then you mark them out. All right, so the best thing to do to mark these key levels is to zoom out. Mind you, the key levels have to be they are those points where the market have bought and sold previously. Those points, if you find that the market has bought and sold along a particular line or within a particular along a particular range or zone previously, then that zone is actually a key level in the market. So you need to zoom out of the chart, then so that you can easily see those highs and lows which the market have created, the buys and the sell points. All right, for example, here is a key level right here, and if you look closely you will see that the market has been buying and selling around this point. Market has been buying and selling. You can see the sales at this point, you can see buys at this point. Let me get my arrow line too. All right, so you can see the buys here, see the sells here, sells here. All right, see the sells here, the buys here, and the market is back at this same zone where it bought before. All right, so that is how to mark out key levels. I'm not going to be showing you how to mark out key levels extensively in this video. Just showed you an example of it so you can just learn how to do it. So you just have to mark out the key levels on your daily time frame, and you need to mark out the one that is very close to the current price, one that is below it, and one that is above it. Then you go to the lower time frame, maybe that is a 4 hour time frame, and also mark it. All right, so I'll just leave this one to be there. Oh, sorry, I've moved it. Let me place it where it was. I think it was somewhere here. Okay. All right, so that's the key level there. Then let's look at the direction of the market. Actually, what happened? You can see the market initially bought. If you look at the candlestick formation at this point, or the kind of candlesticks we had here, you see these three bullish candlesticks moved very nicely. They're able to get to this point with just three candlesticks. But since then, the market has been moving in an impulsive correction. This is an impulsive correction in the market, guys. It's an impulsive correction. All right, indicating the market will be selling at some point. Once it gets to a strong zone, it will be selling very nicely. Now, the market bought and got to this level right here, and it started selling. It pulled back the first time, went back to create a double top, and then it sold. All right, and the same setup I showed you guys the other day is also visible here. That setup I showed you guys about the candlestick sweep, or is it CRT or so, you can see it here. The first time the market created a high, pulled back, then came back again. um the next high didn't get to where we have this previous high, but you can see that the wick of this candlestick was swept, and the body of this other candlestick was just right here at this point. So the market started selling nicely. It didn't get back. This candlestick did not move up to this level to be at the same high with this one. But if you go to a lower time frame, you will see the price action that actually confirmed the market was going to sell. All right, so at this point the market sold nicely. For the market to even have a week here, then meaning the market sold to this point, then started buying, then this particular week here may indicate some kind of corrective buys, which indicated the market was going to sell. If you go to a lower time frame, trust me, you're going to see what I'm just telling you now. That's what you're going to see. All right, so that is it. Meanwhile, let us put a trend line to guide this movement, because I want to show you how I was able to take the trades that gave me this profit you see on the screen. All right, so we have something like this. All right, so that's our trend line right there. This is a breakout of the trend line, and if we zoom out, you see this well. All right, so and also if we go down to the 4 hour time frame, let's go down to the 4 hour time frame. Let's go to the 4 hour time frame. All right, so I actually noticed the market was approaching this zone. Where is that zone? Where is that zone? All right, okay, yeah. I think that was this zone right here. Let me zoom out a bit. Okay, good. So there was a zone. If you look at this, there's a zone somewhere here on this time frame where the market also bought and sold. So I saw the selling down, so I had to mark this level here. Excuse me, because market sold here, market also bought from here too. So I marked it, and I was expecting the market to get to that zone. Once the market gets to this zone, the reactions on this zone will indicate if the market would want to buy or sell. Whichever one the market gives me is what I will want to take a trade. So on market getting to that zone, what happened? Let's just zoom in. You can see the first thing the market did was rejections. The market got to this zone and it rejected the first time, came back again and it rejected, still on this 4 hourly time frame. But the next candlestick sold. The next candlestick sold and went below this and it continued selling. Now, let me quickly go down to the let me quickly go down to a lower time frame so that you see the structure the market formed while on a lower time frame with these two bullish candlesticks. Let's just go to that spot. Let's go. Maybe I should put this object here so I can easily find it. Let's go to the 15 minutes time frame. All right, so you can see this. What structure can you see there? The market was creating. Let me get another line, another arrowed line, so I can use. So you can see this market started creating higher highs and higher lows. And this is actually a confirmation that the market will want to sell to the downside. So all I had to do was to pull out a trend line just like this to guide that movement. See, this is a higher high and a higher low, higher high and a higher low. And the market finally sold below this. Immediately, market sold below that zone, below this trend line, then got to this zone. So I took my entry around this zone and the market sold nicely. The market sold nicely because this structure confirms the market will break this zone, this horizontal this key level, then continue to sell to the downside. Excuse me. So you see on breaking out of this trend line, it consolidated a little around this key level, then sold, came back, retested, then you can see the nice sales to the downside. And this particular pair is a bit volatile, not too volatile, but it can give you some reasonable profit if you get a good entry. All right, so you can see the massive sales that gave me about I took the profit at about the recent USD pair per position with using the minimum lot size. All right, so it is very very easy to make this kind of profit, guys. It's very easy. All you need to do, just mark out key levels. So as it is now, you can see the market is now at another key level and it is reacting there. What can you see there? You can see this market is creating lower highs, lower highs, lower highs, indicating there will be a break to the upside. So what would you do now? You just need to bring your trend line, draw this, and wait for the market to break out of this trend line. Just wait for the market to break out of this trend line and do a proper retest. Mind you, there's a little drop right here, which the market might want to react to on getting to. So just take note of these zones. That is it. Once the market breaks out of the trend line, gets to this zone, and breaks above it. In fact, on breaking out of this zone and closing above it, once the market breaks out of this trend line and closes above it, you can enter a trade and set your stop loss just down here. But do not forget that there might be some reactions at this point. The reaction at this point may not take you out. Will least likely not take you out. So the market might just come and break above this zone, go up, come to retest, then before it binds to a zone, because I believe the market would want to go and do a proper retest on the daily time frame. Let's see the daily time frame again. You can see since after the breakup there has been no proper retest. You can see there's been no proper retest on this time frame. You understand? So the market might want to buy maybe from here to do a proper retest, maybe somewhere here, before continuing the sales. And if this happens, we'll be having a head and shoulders pattern, which still confirms the market will be selling to the downside. All right, so just watch out, just apply those simple approaches. You see, you'll be making some good profitable trades, guys. Some good profitable trades. So just watch out for this breakout and the proper retest. If you find a double bottom, oil and show that pattern, or invested and show that pattern, those are triggers or signs that the market is about to take to reverse. Or you can even go to the 5 minutes time frame to look for double bottom. All right, you can go to the 5 minutes time frame to look out for a double bottom. Like right now, it looks like the market is trying to create a double bottom at this point. Here and here you can see this might be the first bottom. It went consolidated, came back and formed the second bottom. I think there's a little sweep on the 5 minutes time frame. Let's look at it. You can see there's a little sweep at this point. If you look very closely, you see it's a little sweep. So the market might want to buy from here once it is able to break above this little zone here, which acts as the neckline for this double top. This acts as a neckline for this double top, double bottom, sorry. The market might just continue buying like that, then gets to here, come back to retest this key level, this neckline, then it will be buying massively, guys. To be buying, and you make some nice profits from the market, guys. As simple as that. As simple as that, guys. All right, so there's a link in the description of this video. You need to just need to click on it to join my Telegram channel, and also you'll find a playlist of other videos I've made showing you some powerful strategies that can help you to make some good profits trading the boom and crash market and volatility indices, guys. All right, so just go ahead and click on the description to find those information there, and also like this video, subscribe to my YouTube channel, and share your thoughts in the comment section. If you would want to enroll in my one-on-one mentorship, you send me a DM, send me a message. When you get to the Telegram channel, you find my direct contact, so you reach out to learn how to do these things by yourself and not be waiting for signals, guys. You don't have to wait for don't have to ask anybody to manage your account. If you get the right knowledge, you do it by yourself, and you see you'll be very happy making your money by yourself, guys. All right, so quickly send me a DM if you need a private mentorship. Then we will schedule how it's going to be from next week. All right, so the earlier you reach out, the better. So see you guys in my next video. Stay blessed. Peace out.